Now it's time to talk about the most important thing for you to become a successful trader: the risk management. As I've told you before, less than 10% of importance goes to technical analysis when it comes to become a successful trader. The other 90% is only about your psychology and how would you react as a human being with emotions within this risky and volatile market. And then by having a proper risk management and money management system, you're going to be successful, because already we have accepted the fact that we stepped in a stressful and risky market. But how to become a successful trader? Don't go anywhere. Stick to this video until the end, because each and every second worth like millions of dollars. Why? Because these are my own experience throughout years and tens of thousands of dollars of losses. I could have made one of those videos with a really nice thumbnail telling you, oh, come to my video, come to this channel, subscribe. I'm gonna tell you and I'm gonna teach you, show you the secret strategy which can make you millions of dollars. But believe me, it's not gonna work out like that. The reality is not like that. If you go to those channels, there's not a single person who could made money with those kind of strategies without a proper risk management, money management system. Believe me, your trading strategy, I don't want to say it's not important. Of course it's important, and you must have a proper one, or let's say proper ones for different types of the market, which I talked previously in previous seasons. If you haven't checked those videos, go check them out. But there are lots of trading strategies which really work. I don't want to say it's really easy to make money in financial markets, but if you want to divide the things that we have to do to become a successful trader, the easiest part of it is how to gain money. The hard part is how to maintain it and then how to grow it through time. And the secret to do that properly is coming up with a good and reliable and, let's say, less risky money management and risk management system. If you're new to trading, I highly recommend to go and start my videos from the scratch, which I'm gonna leave a link above here and both down in the description, and start from the scratch from the episode 1, season 1, let's say module 1. And because these are the chains of study and chains of lessons which you have to watch them right after each other and then come watch this video. If you haven't watched those, this video is not for you. But if you're already into trading and you've been there for a while and you're here to know only about risk management system, okay, then just start right away. Trading is not a get-rich-quick scheme. It's a marathon. One of the most important skills you need to master as a trader is risk management. Now let's go for some key concepts of risk management in trading, including stop loss, take profit, and leverage. When you enter a trade, you're essentially making a prediction about where the market is headed. But even the most experienced traders can't predict the future. That's why risk management is so important. Stop loss is an order that you place to automatically exit a trade when the price of an asset reaches a certain level. It's a way to limit your losses and protect your capital. When you set a stop loss, you're essentially saying, if the market goes against me by X amount, I want to get out of this trade. Stop loss orders are particularly important because they help to reduce losses on trades that have gone against you. They can be set at a specific price level or percentage of the trade size, depending on your preference. Stop losses can be adjusted during a trade, but it is important to remember that they should never be moved further away from the entry price, as this increases the potential loss. So if you don't know how to work with TradingView, a platform, I've made previously a full dedicated video about this. And if you haven't watched my last season, the season 2 of how to become a trader cryptocurrency, you have to watch that. It doesn't matter if you want to trade cryptocurrencies, stocks, commodities, forex. It doesn't matter. It's for all of you. You must be familiar especially if you're new to trading. You must be familiar with the concepts of support, resistance, candlestick reading, or let's say candlestick chart patterns, even chart patterns themselves, and trading indicators, at least the basic ones, because we're going to talk a lot about them. How can you find the stop loss and take profit? Where is it on the chart? Well, you have to find first the long and short positions tools. It's just right here. You can make them favorite and they're going to pop up here in your favorite toolkit. Let me zoom in. So I'm going to just simply draw my support level here. Let's change the color to green, and then I'm going to set my resistance level above here and change the color to red. Just easy peasy like that. Let's see if I wanted to enter a trade. Let me bring my indicator on the chart. I'm going to use RSI and 20 period EMA, and beautifully. So I waited for the price to reach this support level. How to draw them, how to draw support and resistance levels. I'm going to leave the link both down in the description and above here during the video. So you must watch those videos too if you haven't. And if you don't know what I'm talking about at all. We had a beautiful divergence here in the price. So a lower low in the price. Let me change the color and make it more visible to your eyes. Yeah. And then we had one higher low in the price in RSI. Just like that. And I wait for the price. You can see the indications which is telling us that the price tends to go up. Okay, 3 white soldiers, beautiful. But I wait for a strong candle. By a strong candle again, I mentioned this previously, but I'm going to mention it here quickly again. A strong candle means a candle with a healthy body, not a doji like this here. So I'm going to enter a long trade here. And this is the part which I'm going to talk about. The stop loss, take profit, and different types of this tool. Let me remove candles for a moment and even the indicators, just like that. Yeah. So let's get familiar with different parts of it. The first part is your entry point, which you're going to enter a trade due to your strategy, your plan, whatever it is. And then we call it this entry point. This is our entry point. Let me write it down for you. Entry. We have take profit, which is going to be this green or blue. You can change the colors, everything in the setting. So it's all here. I've talked about those previously. But so this is going to be our TP and or take profit and or target point. You can call that all of those. So this is, and then we have the most important thing here, the stop loss. So I'm going to write it down in red. SL and or stop loss. The name can show us crystal clear that is me stopping your losses. Just like this. The entry point, and in a long trade, let me write it down too. Long position, long or say buy. In a long position like this, the stop loss is always going to be below your entry point. But how much below? Where should it be? Let me bring the chart back on. And as you know, the different parts of position and where the stop loss is, where to put it. Some people I can see in other videos, they say put it just right below this swing low. But if I put it here before the market wanted to go up, it would have taken my stop loss here easily with this hammer candlestick. So I'm gonna, if you determine your support level correctly, you should know that you must put it somewhere below the support level. But where is that somewhere? Okay, that's gonna, I myself, I do prefer it below this shadow here. If the shadow is gonna be too long, one of those market making candles, okay, I'm not gonna do that, which I'm gonna make some examples later on. But in this case, it's gonna be here. And that's it. That's how I set the stop loss. If I wanted to enter the trade here, okay, again, I wanted to wait. Oh, I've seen this beautiful hammer here. and I had another divergence here. So it was the same level, but one harsh divergence in RSI. So another RSI, another divergence here, and it was a double bottom too. So I could enter the trade here after candle close above the EMA 20. It's going to be here. And again, stop loss going to be below here or here. And that's it. But how much this number of a stop loss should be, I'm going to talk about that later on within this video. But that's how to set that. Let's take a look at a short position here. So it's going to be just easy as a cake, easy peasy. So we had one high here, another high here. So it was a beautiful divergence here, higher high, but we had a higher low in the price in RSI. So we wait for a candle close. We had other indications too, 3 black crows. We had 1 shooting star, 2 shooting star engulfing, but we wait for a strong candle close below the EMA 20. So it was here. So this is our entry level. And again, this is our entry level. In a short position, the stop loss must be above the entry level. So again, long trades like this, stop loss must be below entry. In short trades, the stop loss must be above entry. Of course, because you're predicting for the price to go down. So your stop loss is going to be above your entry. So if the market is not moving in your favor and it's going other way like this, let's imagine the market wanted to go up, and it would have taken your stop loss and you wouldn't lose a lot of money. There are lots of rules to do that, which I'm going to talk about that later on. Some people say it shouldn't exceed 1%, but it's not going to work out like that. I'm going to come up with a really good strategy for you in the end of this video, so don't go anywhere. Just stick with me. So this is the stop loss. There are 2 rules to set the stop loss. First, it must be beyond your static level. So this is your static resistance level. Here it was your static support level. So it must be beyond that, just right before that. And it must be just right after the latest swing high in the case of short trade, and in just here in just beyond the latest swing low in a case of a long trade. So this is the way that you're going to put your stop loss here. And that's all about it. In this case, you are going to save your money. If the market's going against you, you're going to save money. But lots of not well-educated traders, they are going to see, okay, the market goes against them, and they're going to move their stop loss just like this, put it away like that. And that's not good. That's really bad. Remember, always, in a money management session, which is going to be next episode, I'm going to talk about this a lot. But just to point that your green area, let's say profit area, must always be bigger than your red area, or let's say lose section. So what we do here is trying to increase our profits size and reduce the size of our losses. That's how the game works. And even if we're going to lose some trades, the next trade profit is going to be as much as going to be covering the previous lose, which makes it almost erased, and you can feel, okay, I had no losses at all. Which I'm going to talk about that a lot, which we call that winning ratio. It means the ratio of your winnings in a trading sequence or a trading period. But the examples that I'm making for you now is without any leverage. So we are not going to timing our stop loss or take profits at the moment, or where to put our take profit. I'm not talking about those at the moment. It's only about stop losses. Then another example here so 2 examples for long, 2 examples for short. Another beautiful divergence happened here. Higher high in the price, higher low in the RSI. Just a quick note here. Just for instance, does divergences happen always? In lower time frames, most of the times they happen, but you shouldn't always wait for divergences. If you can see them, perfect. more strong signal. If you can't see them, you shouldn't always wait for them. You can just rely on candlestick patterns. You can rely on chart patterns. You can rely on your, for example, EMA indication. Even you can use MACD. That's the trading strategy which I'm going to come up in the upcoming sessions. But I've already talked about some of them in the previous sessions. So divergence here, I'm going to wait for one candle to close below a strong candle. It was a beautiful one here. So short trade here. Where to put the stop loss? Just latest swing high was here. And this is my resistance level. I'm going to put it somewhere around here and go all the way down. Another profit. So here I will wait for the price. Do I take a trade here? No. This is the reason when I tell you, okay, as soon as you see a trade, you must see some indications. So it was a beautiful divergence here. Yeah, beautiful. Wow, beautiful. I want to enter a trade. It's going to be lots of profits here, but it's not going to work out like that. Even though it was a beautiful engulfing candle here, a bullish engulfing, but I told you previously, you must wait for the candle close, a strong candle close above the EMA 20. If you wanted to only trade with a divergence and candlestick pattern like this here, it would have taken your stop loss. Even though if you entered this trade, which was wrong, you would have lost less than your profits. Let's take a look at here. If you would have just put your stop loss here, it was 1.70%, 73% of loss. But your profits before that was, look at the number here, 5.73% profit, 5.96 profit, so almost 6% profits, 12% profit, another almost 6% profit, and another almost 6% profit. So you can see this loss was almost nothing due to the profits you made in the market, even though it was a wrong trade and you shouldn't take it. Take profit is an order that you place to automatically exit a trade when the price of an asset reaches a certain level. But in this case, it's to lock in profits. When you set a take profit, you're essentially saying, if the market moves in my favor by X amount, I want to lock in my profits. Taking profit orders helps to secure profits on trades that have moved in your favor. They can also be set at a specific price level or a percentage of the trade size. Take profit orders can also be adjusted during the trade, but it is important to remember to not get too greedy and take profits when they are available. Now let's talk about the take profit. Where should we put this take profit? Where should it be? Exactly. The basic form is that, let me just remove everything from here, and then I'm going to bring them back up, make it a little bit more clear to your eyes. All right. I wanted to take a short trade here. So it was my short trade, as I said previously. It was a divergence in the RSI with the price. I waited for a candle close below the 20 EMA, stop loss here. Where to put my target point or target points? Later on in the session dedicated to money management, I'm gonna tell you and teach you how to play with the target points and how to set several target points in order to make trading strategy more efficient. But here, I wanted to teach you the most basic one. This is a simple price action like take profit. So if I'm gonna divide this area from the resistance level to support level to 4 parts, let me remove everything to 4 parts, like from here to here. And I'm gonna divide it to 4 parts like this. Okay, first 25%, then 50%, and 75%. The easiest way, which I can enter a trade and set a target point, is going to be somewhere around this last area. But where to put it, the best way is to make it in half and put your target point somewhere around here. So this last 25% and make it another half, and this is going to be your target point. Let's bring everything back, and as you can see, if we entered a short trade here, put our stop loss here, and set our target point here, it was beautifully hit by a shadow of this candle. And then when you're out of a trade, you are less stressful and you're ready for the next trade. Okay, next trade was here, candle close here. I'm going to enter a long trade here. Where to put the stop loss is going to be below this shadow here. And okay, this 25%, I'm going to find the half of it. It's going to be here. This one, let me change the color to something like green. Okay, so this is going to be my target point. I'm going to put my target point here, and it beautifully hit my target point right at this moment. Then I'm out of this trade and I'm ready for the next trade. Okay, another divergence here, short trade here. You see how beautiful that is. Stop loss here, and target point was where? Yeah, I can see this. You see that 50% mark of this last 25%, and our target point is going to be here. This is what I call a beautiful stop loss and take profit, and now you have it. That's how to set your stop loss and, of course, your target points. Leverage is a double-edged sword. It amplifies your gains, but also your losses. Leverage is essentially borrowing money from your broker, or let's say exchange, to trade a larger position than your account balance. It's important to use leverage wisely and never risk more than you can afford to lose. Leverage is a powerful tool that can increase your profits, but it can also magnify your losses. It is important to use leverage wisely and never risk more than you can afford to lose. Remember that. I'm repeating that too much because it is important, really. The amount of leverage you use depends on your risk tolerance, trading strategy, and market conditions. Generally, a leverage of 2x or 3x is considered to be a reasonable amount of most traders. But how to work with leverages? How to do that? In the beginning of your trading, as a beginner, as a rookie, if you've been into trading, okay, that you know what to do already. But if you're new to trading, what to do with leverages? What should you do? How much leverage you should use? In the beginning, I would say no leverage at all. Zero leverage for you as a beginner. But let's say you have practice for a while, let's say for a month. You've practiced for another month. You've been market watching and doing paper trading by paper trading or demo trading. It means that you're trading without any money, but now you are at the level which you want to trade with the real money. So of course the amount of money you're going to enter trading is going to be so low, like something like $100 or even less than that. But $100 is a good number. And then you want to enter a trade and you want to use leverages. So at first, for the first month of your trading with real money, use no leverage at all. But let's say you've passed this 3-month cycle and you want to enter a trade. As for the beginning, you must enter your trades with no leverage more than 2 or 3. Do not use that. And how to use leverages, later on, I'm gonna upload videos about trading platforms like exchanges. And later that for Forex trading via brokers and MetaTrader application, don't worry. But how the leverages work, it's really easy. Let's do the math above here. Let me write it down for you here. Okay, your volume is 100 USDT, all right? And this is 100 USDT volume. And you want to enter a trade. If you wanted to enter a trade here, let's analyze this one. Okay, your entry level was here. Your stop loss was 1.96%, and your target point was 5.38%. So let's do the math here. And in order to make everything more clear, I'm going to make them fixed numbers like 20%, like 2%, and 5.5. If you want to set a certain number, you can just do it right here. So your stop loss would have taken 2% from you. So let's do the math here again. SL was equal to 2%, which means 2% of $200, $100 is $2 USDT. And then your TP was at 5.5, right? 5.5, yeah, that's it. 5.5%, which means 5.5 USDT. That's it. So you're going to use leverage, right? If you want to use a leverage in this case, for example, let's say 10x leverage, but you're not allowed to do that. Later on, I'm going to tell you. For the beginning, 2-3x leverage is enough, but I'm using 10x to make it rounded up. So it means timing everything here in 10. So let me copy this one here. It means that I'm entering my trades with 100 USDT times 10. Why I'm not using $1,000? Because that's not real. It's like you're borrowing that money, but everything is going to be timed here. So your loss is going to be 20%. And if you're going to lose $20, and your tip is going to be 55%. And if you're going to win $55. What I want to tell you here is to keep in mind, it depends a lot on your trading strategy, on your, it takes a lot of experience to use 10x leverage. Even I myself, I'm not using 10x leverage all the time. And I'm not exceeding that, like say in 99% of the times. If you see those kind of advertisements using 20x leverage, 50x leverage, that's crazy, you know, that's gambling. I do not believe in that, and I'm going to later on tell you why. But in this case, this is not for you. It's just an example. Please don't do it in the beginning, especially if you are a beginner. Use no leverages at all. But we're going to have a 20% threshold. Let's put it here. And this is my rule of thumb. My losses when I'm using leverage, wherever it's going to be, is not going to exceed 20% of my whole capital. But for you as a beginner, it shouldn't exceed more than 10% if you're a beginner. So whatever number you see here, okay, in this case, let's make it easier right now. In this case, it's 2% of loss. So in this case, you are allowed, after that 3 months of practicing and using no leverages, which I told you before, in this case, you have 2% of loss. You can use 5x leverage because 2 5's time is 10. So your threshold of loss is 10x. So you can use 5x leverage. But if you win, you're going to win 5.5 times 5. Just like that. Next one here. Your loss was at 2.55%. Let's say 2.6. In this case, you can only use a amount of leverage, which is not going to exceed 10%. So let's say it's a 3%. Let's put it here. 3% loss. You cannot use any leverage more than 3x in this case. But if you win this trade, it's going to be like 5 times 3, like 15% of profit. Next one here, it was almost 2%. So you can only use 5x leverage and your profit is going to be 5.38 times 5. This is the calculation, the risk management you should do. If you're confused or you think you don't know what is it all about, just feel free to ask me in the comments below. I try to do my best to explain it to you. And in the upcoming sessions, we're going to talk a lot more than this. And we're going to make tons of examples. Don't worry. But if you don't get it at all, just feel free to ask me. I would be happy to help you out because I've seen lots of people, lots of traders are confused with these concepts. Where should we put our stop loss? How much leverage we should use? So here's a rule of thumb. Again, I'm going to write it down for you here. First months of your trading, after the training course is going to be finished, this training course or any other training course, first month is going to be dedicated for only market watch. Then Second month is going to be only dedicated for demo trading. It means trading without money. Third month is going to be for your trading, actual trading with real money, but with no leverage. And then from fourth to let's say 6 months, you're going to only choose in between no leverages to three leverage at maximum. So this is the rule of thumb which I wanted to tell you. This is what you should do if you want to become successful. I know that you've counted on this money you came to, but believe me, there is no detour. There is no shortcut to become a millionaire in one night or 1 month or even in the first year of your trading. Go slowly, improve your skills. Then you realize that by time you are following up everything I've told you properly, you are making money, and you're making like crazy good money. And then after that, after 6 months of trading, you're allowed to choose, let's say from 6 months up to 12 months, you're allowed to use in between no leverage to 5x leverage. After a complete year of trading, gaining experience and working on your issues, probably which I'm gonna be always there for you to help you out completely for free. Then in this case, after a year of trading, gaining experience, you're gonna realize that you can use more leverages, higher leverages. That's up to you. I myself, I said 99, but let's say 95% of the times I'm choosing at last 10x leverage, So my tolerance is in between no leverage up to 10x leverage. Sometimes I'm using, let's say 15x leverage, and let's say 1% of the times in really low time frames, I'm gonna choose 20x leverage, which I'm not recommending to you or any other traders at all. That's crazy, and the risk is so high, and it can take lots of your profits, which you really worked hard for a couple of weeks or let's say months or days, and that's gonna hurt, believe me. Managing risk is all about finding the right balance between potential profits and potential losses. But risk management doesn't end here. It is important to continually monitor and adjust your stop loss and take profit orders as the market conditions change. If the market moves in your favor and hits your take profit level, it's important to take the profit and not get greedy. Similarly, if the market moves against you, it's important to cut your losses and exit the trade according to your stop loss level. Review your trades and performance is also an important part of risk management. By analyzing your trades and identifying your strengths and weaknesses, you can adjust your trading strategy and risk management techniques to optimize your performance and reduce potential losses. One effective tool for tracking and analyzing your trades is a trading journal, which I'm going to teach you later on by the end of this course how to write one. A trading journal allows you to record your trades, track your performance, and identify patterns and trends. By reviewing your trading journal regularly, you can identify areas for improvement and refine your trading strategy. Risk management is a crucial skill for any trader. By using stop loss, take profit, and leverage wisely and continually monitoring and adjusting your trades, you can optimize your profits and minimize your losses. Remember, trading is a marathon, not a sprint. Focus on long-term success by mastering risk management. So as you could see, it is really important to have a really good and reliable risk management system for different types of the market. If you have a proper one, you're gonna slowly grow your account, and after a short amount of time, before you're gonna realize, you're gonna grow your capital account significantly. I talk to people throughout the time, lots of people, especially with holders, let's say hodlers, and even traders, and I talk to them and I ask them, still ask for today, and I ask them, what is your risk management system? And they say, what? What is risk management? And when I asked them, do you set stop losses? And I say, what is a stop loss? And I am so surprised. And believe me, due to the rule and law of 91% losers in the market, the majority of those 91% of losers are people who are not even familiar with this kind of stuff and didn't even heard of them. So just practice. Feel free to ask me any questions popping into your mind. Watch my previous videos, and I promise you, if you follow up everything that I'm telling you, you're gonna be a successful trader with good practice and proper risk management system. So did you like this video too? If you really like it, hit the like button, subscribe to my channel if you haven't yet, and share my videos with your friends who are keen to learn all about this unknown world of trading. And by turning on the notification bell, you're going to be the first to be informed when I'm uploading a new video which I'm doing on daily basis. Thank you for watching. See you in the next one.